Good evening, option traders. Sam the Trader Geek with your Wednesday night, April 23rd, 2025 option review video. Hope you had a great trading day and it was pretty good. We gapped up, and as you can see from here, NASDAQ was up 3.08% at the open, SPY up 2.5%. Small cap growth up 3.29%, but we gave back quite a bit of that throughout the day. So we didn't close as strong as we opened, which might be expected with such a strong numbers. And you can see that where we closed in the closing range was kind of low in the range. So hopefully that doesn't portend weakness to come. I don't think so. I think we have a few more days of rally in here. If you look at today's major industries, you can see that a lot of green here with semiconductors leading the way, 3.7%. Internet stocks up 2.7. So it was about tech rally. Cryptocurrency stocks up 2.5. China up 2.4, as were metals and mining, even though the GDX, the gold miners index, was down a bit, 2.9%. And then solar down 1.9%. But you can see the percent from the open, how many of these sectors closed below their opens. And the only ones that to improve from the open were gold miners and metal and mining. Everything else was kind of flat or down from the open. I always like to look at this to see how the rally is proceeding and which industry groups are holding up the best. You can see here, compared to the moving averages, still a lot of red. We finally have an up 8 EMA sloping, but the rest are down. So we got a lot of work to do to get these into the green. We've got to get over that 21 EMA. That's going to be kind of the first hurdle to give us more hope about a better result in terms of this rally. And if we take a look down here, you can see that as of last week, the National Association of Active Investment Managers, we came down from 50 up to 57.5, and then this past week be 35.2. So this was kind of telling a tale that we were getting close to very much oversold, as these active managers were really bearish. And this is kind of a sentiment secondary read on the market. So we could see that a bounce was inevitable. Anytime we get this low in the 9 average, we get a bounce, among other reasons, with political and tariff news, and long live our Fed Chairman Powell. Taking a look at, that's not the chart I want. There we go. We're getting to the other chart. Let me make sure I've got the right one selected here. And where's my sharing? I don't have the right one selected. Okay, now I'll share that one. Sorry about that. And there we go. So I got my tri-panel. Here's the daily chart of the SPX. You can see that this red line here is the options implied expected move, the top part. So we went way up and we closed kind of low in the range. So that's not fatal, but it's not a good look for a strong rally day. But it was a bit on news last night, so it can be forgiven a little bit. But lots of work here. So we get this ATR trailing stop 56.27. Is pretty far away, but one step at a time. And we can see this MACD is finally looking solid. And then we'll take a look at the weekly, and just a chop fest here. This is the 100-day moving average. We're hanging on to that, but and then the monthly forming a big long tail here. Would love for April to close positive, because a positive April portends better things for the rest of the year. And as of right now, we are in the red month to date, but we do have about 5 trading days left in the month to kind of get there. Actually, it's 4, Thursday, Friday, and then we have Monday, Tuesday. The first, I believe, is No, I guess we do have five, with next Wednesday being the 30th. We shall see. Taking a look at the VIX, as I like to do on these videos, you can see the VIX ultimately finally closed below the 21 EMA. Good sign for the bulls. MACD is definitely on the decline. So this also indicates that there's probably more gas in the tank for this rally. If we take a look at the VIX options and the pricing of the VIX options, hopefully I can resize this and not mess my whole setup up. We saw, no, we don't want AMD yet. We'll put up the VIX here. We can see that the next monthly options expiration is May 21st. We finally closed below the 30 level. And so at 28.45, let's call it 29. If we go out and look at the 30 calls on the VIX, if you're buying calls on the VIX, of course, you're bearish. And so 30, call that $1.82 for the calls, and then go out $1 on the um, puts, then that's at 28 level. And so that's about $4.90. So two and a half, three times, not quite three times for the puts than the calls. And this tells me that the bulls have the edge here, since they're still pricing out puts a lot more expensively than calls, which means they're hedging their volatility, if there's such a thing. So it's one data point, but it also says that if there was a, a pullback that's imminent and brewing, we would see a lot more higher prices on the calls than we do the puts. SPX came into the week with about a $136 move. And we can see here that through Friday, we still have about 108 points to go. So the bulk of the move is already there and has been holding up despite being 3 days down in the week, so to speak. And then you can see here that what was I going to point out on the chart? Yeah, we're above the options supply to expect move. I know what I was going to show you. The range of this week's candle, the low being 5,100 and the high is 5,470. So a range of 370 points so far this week on a $136 expected move. So we've more than doubled the expected move so far. Not quite outside of it. We closed inside of it, but at least the range so far this week has been pretty extreme. We went below it on Monday and above it today. So we're back in the range. Here's the lower edge and there's the upper edge. So we're ping-ponging between those two. So some chop to come, I would think. And kind of the hard part is over here. Now let's see what we're going to do. We got to get through this congestion zone and try to get up to this 5,600 level is the next step. So not impossible, but 50-day looms also up here at about the 6,650. And I think that's going to be a pretty strong resistance. But if we can get over there, then 5,800, here we come, or at least 5,750, the 200-day moving average. Okay, enough technical analysis, and let's take a look at our trades and what we've got going on. See if this works out. Let me see if I can get this back. Hooray. Don't have a lot of trades on. We got 12 trades on, and AMD is our first one in the alphabet. We can see that today we took off about half of these for a 50% profit, better than a 50% profit. We sold them for $1.54, closed up some of them for 60 cents, and then keeping the rest. And that's what I like to do, especially in a very volatile environment. We don't want to hold on to too many of these because we just don't know what's going to happen. But looking at AMD, the rally was kind of meh today. You can see the MACD is trying to turn up, but we hit the 21 and we backed off. So we hit a high of 93.74. We closed low in a range. So AMD remains a whipping boy of the semiconductor stocks, and I just keep thinking that this thing should be over 100 and stay over 100, but it doesn't, and it's definitely no NVIDIA, so to speak. Costco, another one with a really disappointing candle. So we opened at 995 area, went up a little bit at the open, and then came down. So what we have here is a rolled out um, bull put spread, and we're finally getting to break even on the roll part over on the whole thing. Really, this is out to August right now, so. Nothing to do. This is pretty much out of the money. We're at the 865 short strike, and Costco's held up more better than most stocks in this rally. So, or in the pullback, I should say. But today was not a good look for it. And despite yesterday looking good, it's struggling with this blue line, the 50-day moving average, and the MACD threatening to cross back down again. So that's not a good thing, even though the RSI is kind of at the midline. We'll see what happens there. Decker's Outdoor, we've sold a put spread, and here's another one where kind of the story of the day, trying to get above the 21 EMA and just failing, and opening up at around $110, rallying up to 113, and then closing very low in a range at 106. So we're up 40% on this put spread, and I would say that's mostly on volatility collapse. So we're up 40%. Once we get to 50%, you don't have to wait for me to take about half of them off. And in fact, we may have, let's see here if I can tell if we got to a 50%. Yeah, we got it was down to 61 cents at one point today. So we did get a 50% profit on these today. And if you haven't done so, take some profits if you have multiple spreads on, just to keep things from getting too risky if the market turns around and goes down, because it is a wacky market. Lyft, here we have, again, a cheap put sale going out to June. We paid 47 cents. We're still down 45 cents, but we haven't even approached the 10 level, so to speak, or I guess we have approached it, but haven't really closed below it. And so now it looks like it's trying to make a turn. This one actually went above the 21 EMA, which is a good sign. 50-day looms up here. So these Lyft puts have a lot of time in them. Cheap put was a long trade or a long-term trade. We just let it do its thing and hope it doesn't come back to the $10 level. NVIDIA, we have two plays on NVIDIA, and one of them is our combo play, and that one is right here. And we can see that we didn't get quite to our next profit target since we've taken three profit targets here. We're trying for about 11 bucks. We're still up 177% on these. We paid $2.74. We're trying to get kind of a quadruple on some more of these. They have out to January, so this is the definition of a long-term trade. And NVIDIA doesn't report until sometime in late May, so we have a lot of time here to get to our next price target if tech is going to show strength, and I think it will. So we'll be patient with this one. I may, if this gets back up to say the $9-10 level, I may front run this next price target, especially if we can hurdle this 21 EMA. Again, look at the red candle, meaning the close was lower than the open. We opened at 104.52, and we kind of backed off to 102.71. The other one we took profits on half today were the NVIDIA puts. And so we had sold these for about $1.01, and we closed some of them for 46 cents, and then we'll just let the rest ride and take off some risk here. And with the 65 strike being so far away, if we can get some steadiness and evidence that this thing wants to run, maybe we take those 65 puts and we roll them up to take advantage of better prices while volatility is still there, I'll have my eye on that one for you guys. QQQ, have a couple of plays on here. One of them is the inflection point spread, where we bought the 420, 440 put spread. We've taken a couple of price targets on this one right here. And we are now down on these, given that the market has rallied a couple of days. The Qs are up about 25 bucks over the last couple of days. So let's see, from the lows, 428, we're at 455. Yeah, so about 27 bucks since Monday. So obviously the rest of these are below our cost. Well, we only paid 16 cents for them, but now that we're out of the money, we're going to just hang on to these and see what happens. We got plenty of time. I'm actually looking at the wrong one. I'm sorry, guys. This is the one that we just put on this week, and we've taken a couple of price targets. And actually, I'll have to double check to confirm these, but we're still up 60% on them. But as long as NASDAQ is rallying, that short put that we have out in July will help mitigate kind of the loss in the 440, 420. But we're going to keep this hedge on for now. I'm not going to quite take that off because we just don't know how long this rally is going to last. And then this other play right here, this is the remaining short put that we have in June from the old inflection point spread that we had on the Qs. And this one is coming in nicely. Overall on the trade shows us down 5,500%. But what we really need to see is this $420 put out in June to come back down. But it has come down quite a bit since we put this play on. So we'll keep an eye on this. This is a case where we closed out the actual put spread. And at the time, we didn't make much money off of it. We took a couple price targets, and then the rest we expired out of the money given the big rally on April 9th. And then actually this might have expired before April 9th. So I better double check that. But in any case, we just have the short put from June on hand. SDGR, another ugly candle. I didn't like this at all. We gapped up. We opened up at 27, went up about 27% or about 1%, and then we came right back down. So not a good look for this, but not fatal. We're still above the 8 EMA, but no, not even getting close to our price targets. We're down about 18% on this. After looking so good at the open, I took a check, and we didn't quite get to our first profit target here, which is about 660 or 50% profit. So we'll hang on to that. It was looking a lot better earlier in the week when the market was tanking. This was still holding up pretty well. SPY, another one where we have a couple of plays on here. And basically, both of them are the remaining puts of these inflection put spreads. So last week we closed the 440, 550, 540 put spreads for full value, at least the remaining ones. And then we kept on the short 440 put that expires in July. And this one's coming in nicely as volatility comes in. And then we'll just hold on to this for as long as we can, as long as the market is cooperating, then we should see this one work in our favor. It's kind of a bullish play. And since we took our profits on the put spread, this is a way to make money on the short put, which someone, I think it was David in the forum, suggested is something we should do, and which is what we've been doing. Here's another short put that we have on remaining from another inflection point spread. This one is a June 30th put that is a 505 put. So definitely $30 out of the money, a lot farther away than it was just a couple of days ago. This one is working in our favor, albeit a little bit slowly, and we want to just end up cashing this out and closing this trade out once those SPY puts come in. I have a feeling this will be on the books for a while unless volatility collapses under 20 pretty soon. But for now, we just have it as a bullish play at this point. And one last trade is the TLT. We roll these out to August to the 85s. And, we laughed, we cried, so to speak, with the TLT. Look at that candle. I mean, the ugliest of the ugly. We opened up this morning at 89 or 88, 88, and then rallied a few pennies and came right back down and closed at the low. So that's not a pretty candle. But it still was up about 1%, not bad for the TLT. We're still down 42% on these puts, but this is a roll from the 88s in May. Got lots of time on them. Again, once you get to about a 50% profit on these, because then just take about half of them off, but I'll try to alert all of these as we go along. So that's all the open trades that I have on my ledger, and almost put out a trade on MSTR this morning, but given that I saw Bitcoin sinking midday, I decided to hold off on that. It was a combo play, and it was the right decision because we would have been underwater on it by the end of the day. I'll take a look at it again tomorrow and see if I want to put it out. But I am looking for trades. Been a lot less active than I usually am in this environment. It's good to be cautious. Put sales work a lot better than buying premium, especially in a environment where the volatility is declining. So when I see plays out there worth putting your money at risk for, I'll put them out. And as Dan wrote, we're looking at trying to get some weekly webinars started up to kind of replace this midweek video. And anything that you might suggest that we do to change up these videos to make them more interesting, to get more people to watch them, I welcome your suggestions. I appreciate you being here and for listening and watching. My name is Trader Geek Sam, and at Trader Geek on Twitter. I'll see you in the forum or on Twitter. Give me a follow if you don't. Have a good night, and we'll talk to you soon. Bye-bye.